Today's video is all about stock market myths. We are going to debunk these common misconceptions about investing in the stock market so that you can realize what is really true and what is fiction. And then you can be successful with stock market investing. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. Let's dive right in. I do not want these stock market myths holding you back from investing in the stock market. We are going to bust through these myths today, and I'm going to give you some tips on how to invest in the stock market even easier. Plus, the last myth that we are going to bust was really the hardest myth for me. The first stock market myth I want to talk about is timing the market. People think that they can get into the stock market at a certain time and then create really high returns really fast. They try to predict the perfect time to get into the market and then get out of the market. And honestly, no one can do that. It is not a good idea to try to time the market. We want to focus on time in the market. It's extremely challenging for people to time the market and be very successful with that. People talk a lot about making really high gains in the stock market very quickly, but those are honestly not things that people usually repeat. It's usually something they just got lucky with once. So if we are able to realize that it takes time in the market to make a lot of money, which is very possible, then we're going to be less focused on trying to make a quick win and increase our investment very, very quickly. Because when that doesn't happen and we're expecting that quick win, we are going to become fearful and probably pull our money out of the stock market, and then we are locking in our losses. Instead of thinking, oh, all right, I'm more about time in the market and I know it will grow over the long term, so I'm going to leave my investments in the stock market and let them grow over the long term. The second myth I want to talk about is that investing is like gambling. I actually broke this down in another video, so if you want more detail, I will leave a link above. You can check it out later on. But people think that investing in the stock market, buying stocks, is like gambling. And honestly, they are two very different things. When you're investing in the stock market, you're actually doing a research and you're investing in companies that you think are going to grow over the long term. And with gambling, you're essentially just turning money over and hoping you get lucky and make more money. And with gambling, it is pure speculation. You are just buying that lottery ticket, or you are playing blackjack or whatever it is, and hoping that you get lucky. It's not putting your money into something that can actually grow over time. It's just putting your money into a pot of money and hoping that you are the winner. And the odds of you actually winning is about 1 in 300 million. So the odds are terrible with gambling. But with investing, you have very high odds, especially if you are doing it correctly, which I talk about in pretty much all of my videos on my YouTube channel. And then the third stock market myth that I want to bust is that I have plenty of time to invest. I don't need to start right now. I can start later. I can start next year or next year. And then all of a sudden 10 years have gone by and you haven't invested your money. The earlier we start investing, the more money we are going to make because of compound interest. Our money earning interest on our money. Let me show you a quick example of what I'm talking about. If we invest $3,000 per month, over the period of 10 years at a 10% rate of return, which is pretty average for the US stock market, then at the end of 10 years, we're going to have $614,535, which is a significant amount, a lot more than if you were to keep it in a savings account. But if we did it over the period of 30 years, then we're going to have almost $7 million. We will have $6,781,465. You can see in this chart all of that green is compound interest. All of that blue is the money you put in. So the amount we are putting in is very, very small compared to the compound interest we are earning on our money. And honestly, one of the biggest regrets that I have is not investing more money even sooner. So don't make my mistake and get started in the stock market today. And if you do want help with investing in the stock market, I have a free masterclass where I go over how I can help you invest in the stock market. I will leave a link below in the description. You can click on that and check out the free masterclass. And that way you can get started today. The fourth stock market myth that I want to bust is that you need to be a financial expert to be successful with investing in the stock market. That is not true at all. You do not need a finance background, you do not need certifications in order to be successful with stock market investing. Honestly, one of my clients has a background in music. She sings for different events, and she does not have a background in finance, but she was able to set up her accounts and we got her money invested. Now she is on her way to becoming financially free without a background in finance. And there are plenty of other examples of people being successful with the stock market and not being a financial expert. So it is definitely doable. Stock market myth number 5 is that you need to have a lot of money to invest. People think you need thousands or even tens of thousands of dollars to get started in the stock market. Honestly, you can get started with $5. I have a video where I break this down. I will leave a link above. You can check it out later on. You do not need a ton of money to get started in the stock market. Of course, the more money you have when you start, then the more it is going to compound over time and the more you will have later on. But nonetheless, you can start with $5. It does not take a lot of money. Stock market myth number 6 is that you are going to lose all of your money in the stock market. I know this is a big fear for a lot of people. I know I was afraid of this before I started investing in the stock market. But honestly, you are not going to lose all of your money if you are investing in good investments. For example, if you are investing in an index fund, which has a whole bunch of companies inside of one single fund, you are not going to see all of those companies go out of business and then lose all of your money, unless something is wrong in the world, and then I would be worried about food storage instead. So most likely, you're not going to lose all of your money if you're investing in an index fund that has a whole bunch of companies inside of it. If you are putting all of your money into just one single company, then yes, that's super risky and you could lose all of your money. But we can be smart with our investing and not do that. And if you want even more detail about how we will not lose all of our money, I do have another video breaking it down. I'll leave a link above. And then the 7th stock market myth that I'm going to bust is that it's going to take too much time. People think that they are going to have to spend a lot of time figuring out which investments to make and keeping an eye on their investments, and they don't want to do that. But honestly, it can take very little time. And the way that I like to teach this is once you have your investment account set up and you have your money invested, then we are able to automate your investing. So you can spend maybe an hour a year on your investments. It does not take that much time. I know there are people out there that are day trading, and so they are constantly watching their investments and they are buying and selling throughout the day. So yes, that is a full-time job if you want to try to be a day trader. But the way that I like to teach this is you can set it and forget it. And that way you can spend your time on things a lot more fun, like traveling or spending time with family or friends. And you can let your money grow in the background. And like I mentioned before, I do cover this in my master class, so make sure and click that link below in the description. And then stock market myth number 8 is that it is safer to keep your money in a savings account rather than investing it. Honestly, this is what I struggled with before I started investing a lot in the stock market. I was really nervous to invest in the stock market, and I did think I would lose all of my money, and I didn't know what to invest in. I didn't know where to start, and I had a ton of money in my savings account. At one point, I had $54,000 just sitting in my savings account, and that was before I had multiple properties and wanted a larger emergency fund. I just kept saving my money and leaving it in savings. But honestly, that is scarier than investing in the stock market, because you are not even keeping up with inflation when you're leaving your money in a savings account. And how are you going to retire if your money is not invested, if it's not working for you? You can't live off of money just in a savings account. you will drain that money and be out of money. But if you're investing it, then you're able to just withdraw the money that is being made by compound interest and still have money left in your investments. And let me show you a quick example on what I am talking about. Let's say you do have $50,000 sitting in your savings account and you want to add $500 every single month, and you are earning a 1% interest rate on your savings account. After a period of 30 years, you're going to have $277,299, which sounds like quite a bit of money. But if we were to invest that amount, then after a period of 30 years, you would have over $2 million. $2,122,114 by investing your money instead of leaving it in a savings account. You can see the drastic difference. So it is definitely not safer to leave our money in a savings account versus investing in the stock market when we do it properly. And just to give you a few tips on how to invest in the stock market even better. First off, we want to, of course, educate ourselves, learn about how to invest in the stock market very simply. And then the second thing is to diversify our portfolio. We don't want to leave all of our money in just one single company because that is super risky. We want to reduce our risk but still make good money. And then the third item is to focus on the long term. We don't want to get caught up in trying to time the market. We want time in the market. Comment below and tell me which myth I busted for you. I'm curious to know. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and to the little bell to get notified on when I post new videos. And if you want to see even more amazing content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.